Welcome back to Trading 360. Time for our 360 round, all about Amazon. And Dan Romanoff is with us, and Arun Sundaram is with us. Thank you both for being here. Dan of Morningstar and Arun of CFRA. Arun, what did you think? Because I just heard all great things: the advertising, cloud, streaming, looking at NBA contracts, and AI, generative AI, the way of the future. I mean, how are you feeling about Amazon today, Arun?
Yeah, hey Nicole. Yeah, no, I thought it was a nearly perfect quarter. You mentioned a lot of the highlights. I think the two downsides of the report. One, the soft guidance, which we're not looking too much into because Amazon typically does guide conservatively. So I think you should take their guidance with a grain of salt. The other area of caution was on the CapEx line. They did say that they're going to significantly increase CapEx this year, which kind of worries investors because that could result in some near-term margin pressure. We're not overly worried about the step up in CapEx, and that's largely because Amazon is still growing operating profits and operating margins while also reinvesting in its business. So just because CapEx is going up, I don't think you'll see any material deterioration to Amazon's margins. So we were overall positive, and we continue to have a buy on the stock. And in fact, we did raise our target price. It's now up $12 to $233.
Up $12 to $233. Dan, where do you feel this is headed and why?
Yeah, I agree with that. I thought it was a really nice quarter from almost every angle. I thought the AWS acceleration was a key takeaway there. I like the discussion around AI. That's a multi-billion-dollar generative AI. Excuse me. That's a multi-billion-dollar run rate business for the company now. 17% year-over-year growth for Amazon. That's an acceleration versus last quarter and versus a year ago. So that looks really good to me. So those are the things that I was really pleased to see. I like the improvement in the e-commerce business as well, with improvements in margins, delivery speed, order frequency for Prime members. I think those things bode well for long term. And so I agree that the guidance, they do generally tend to guide a little on the conservative side. The operating profit guidance was sort of in line anyway with expectations. So you saw a little bit of downside to the revenue number, but not alarmingly so.
When we talk about CapEx, you sort of both mentioned this in AI. And so, for example, we heard from Meta and everybody sort of balked at the spending that they were going to be doing. I don't know if anybody's actually compiled the CapEx from all of these Mag 7 names. But what's interesting, and I guess it's a good thing, that they're all willing to spend more these days to sort of advance. They have to do exactly that. Right, Arun?
Yeah, exactly. And that's why we did take our CapEx estimate up. We're expecting about $64 billion in CapEx this year. That's about 22% of an increase compared to last year. And that's largely due to AWS and all the investments they're going to make into servers, chips, things of that nature to really capture the demand that's going to be there for the next at least the next decade or so with these new opportunities in generative AI. Again, I think the big difference between Amazon and some of the other big tech companies out there is that Amazon can continue to step up their CapEx investments while also growing margins, and that's because I think there's still a lot of retail margins or retail efficiencies left to be unlocked for Amazon. And so we do see Amazon continuing to grow operating margins this year as well as next year.
Yeah. And so, Dan, what are you thinking of when you expand this out and you think about Amazon? And what is your price target, Dan, right now for Amazon?
$193.
193. When you look at the other names here in the Mag 7 or some of the other names you follow, are there other buys that you like right now?
I think that just, you sort of commented on the CapEx number. If you started adding out just between Microsoft and Amazon, that's, if you go with around $65 billion this year for Amazon and $50 billion for Microsoft, I mean, you're talking about $115 billion in CapEx. Most of that is just data center capacity. So that's a very strong number. I think Microsoft and Amazon are both sort of long-term winners in AI, and so that's something we like. And they're both the long-term winners in public cloud. So those are sort of two of the biggest secular growth stories in tech right now, and both of those are really well positioned.
Right. So setting up for data center and cloud, and that's their area of strength and continued strength. Arun, do you have any buys on some other names that you're following closely here?
Yes, I mean, I mainly cover retail. I'm not in the big tech space, but in amongst retailers, yeah, we like Amazon, we like Walmart, we like some of the discounters as well, Dollar General, and I also cover packaged foods companies as well. And we have a few buys in the packaged foods area. One of them is Kraft Heinz, which did report today, and we also like Lamb Weston is another packaged food company that we do like.
Yeah, I actually mentioned your name in one of the prior segments. That being said, just quickly, the consumer, are we feeling the consumer is going to hang tough here, Arun?
Yeah, I mean, there's clearly some signs of the consumer cracking, especially among the lower income consumers. But I think the middle income and the upper income consumer is holding up relatively well, and that's why those companies and retailers that are exposed to more of the middle and upper income are doing better than those that are exposed to that lower income. And clearly, the consumer spending environment has been strong for the past few years, but there are signs of it slowing down, and will likely continue to slow down this year.
Yeah. Great to see you both. Thank you so very much, Dan Romanoff of Morningstar, Arun Sundaram of CFRA Research. Thank you both.